All right. Hey, everyone. Thanks for joining us. 2023 was our year of efficiency, which focused on making Meta a stronger technology company and improving our business to give us the stability to deliver our ambitious long-term vision for AI and the metaverse. Now, moving forward, a major goal will be building the most popular and most advanced AI products and services. And if we succeed, everyone who uses our services will have a world-class AI assistant to help get things done. Every creator will have an AI that their community can engage with. Every business will have an AI that their customers can interact with to buy goods and get support. And every developer will have a state-of-the-art open source model to build with. And one thing that became clearer to me in the last year is that this next generation of services requires building full general intelligence. And I recently shared that by the end of this year, we'll have about 350,000 H100s, and including other GPUs, that'll be around 600,000 H100 equivalents of compute. We initially underbuilt our GPU clusters for Reels, and when we were going through that, I decided that we should build enough capacity to support both Reels and another Reels-sized AI service that we expected to emerge, so we wouldn't be in that situation again. Now, going forward, we think that training and operating future models will be even more compute intensive. But overall, we're playing to win here, and I expect us to continue investing aggressively in this area. In order to build the most advanced clusters, we're also designing novel data centers and designing our own custom silicon specialized for our workloads. The second part of our playbook is open source software infrastructure. And this approach to open source has unlocked a lot of innovation across the industry, and it's something that we believe in deeply. Open sourcing improves our models, and because there's still significant work to turn our models into products, because there will be other open source models available anyway, we find that there are mostly advantages to being the open source leader, and it doesn't remove differentiation for our products much anyway. And we know that people want to work on open systems that will be widely adopted. So this helps us recruit the best people at Meta, which is a very big deal for leading in any new technology area. We're not shy about having multiple teams experimenting with different versions across our apps until we get it right. And then we learn what works and we roll it out to everyone. We start by learning and tuning our products until they perform the way we want, and then we roll them out very broadly. From there, we'll focus on rolling out services until they reach hundreds of millions or billions of people. And usually only when we reach that kind of scale do we start focusing on what monetization will look like. We've invested heavily in both AI and the metaverse for a long time, and we will continue to do so. Ray-Ban Meta smart glasses are also off to a very strong start. Our partner, EssilorLuxottica, is already planning on making more than we both expected due to high demand.
Q4 total revenue was $40.1 billion. Cost of revenue decreased 8%, R&D increased 8%, marketing and sales decreased 29%, due mainly to lower marketing spend and restructuring costs. We ended the fourth quarter with over 67,300 employees, down 22% from a year ago. Net income was $14 billion, or $5.33 per share. We expect first quarter 2024 total revenue to be in the range of $34.5 to $37 billion. We anticipate our full year 2024 capital expenditures will be in the range of $30 to $37 billion. We expect growth will be driven by investments in servers, including both AI and non-AI hardware. On your first question, what is driving strength in the ads business? First, just creating engaging on-platform ad experiences. We see that with formats like click-to-message ads, where we continue to see good momentum. Second, we're really making it easier for advertisers to connect with their marketing data. And then finally, continuing to really use AI in important ways across our ads platform.
I went back and looked. I don't think you've ever raised the high end of your CapEx guidance before. What should we be monitoring for what would push you towards either the lower end or the higher end of that CapEx guidance as you move through 2024? Thank you.
So the increase in the top end of the range really reflects that evolving understanding of how much demand we may need. And we're also continuing to keep a close eye on supply availability.
So the themes for the year of efficiency were to make us a stronger technology company and to improve our financial performance primarily with the goal of providing stability so we can invest in visions around AI and metaverse.
So first of all, online commerce continues to be one of our strongest verticals overall. On your second question about why now in terms of initiating a dividend, returning capital to shareholders remains an important priority for us, and we believe introducing a dividend really just serves as a nice complement to the existing share repurchase program. The dividend doesn't change how much we will be, or it doesn't change the way we determine the total amount of capital we return, and we expect that share repurchases will continue to be the primary way that we return capital to shareholders, but introducing a dividend just gives us a more balanced capital return program and some added flexibility in how we return capital in the future.
Our communities are growing and our business is back on track. Once again, a big thank you to all of our employees, partners, shareholders, and everyone in our community for sticking with us and for making 2023 such a success.